Forest allowance. Forest allowance is a form of statutory allowance that available to a person who incur qualifying forest expenditure in the business of extracting timber in a forest. Once the forest allowance is claimed, the same qualifying expenditure is not allowed for others capital allowance under Schedule 3. The paragraph forest in relation to a person means a forest in respect of which he has a license to extract timber, therefore being a forest in use by him for extraction of timber for the purpose of business of his which concern wholly or partly of that extraction.
Today, I would like to present about Qualified Foreign Expenses, also known as QFE. QFE refers to incurred by a company and individual to carry out foreign exploitation activity. Explain of QFE include the cost of land preparation, clearing and planting tree, purchase seedling, fertilizer, and maintenance the forest vegetation. The expenses are referred to labor, forest road, and journeying system that support plantation activity are also qualified. However, not all expenses are considered qualified. For example, the cost of land purchase and expenses not directly related to forest plantation activity. For example, a Malaysian plantation company, such as forestry company operating in Sabah and in Sarawak, may include high expenses of a land preparation, planting tree, and maintenance forest plantation. Their expenses are recognized under QFE. One of the main benefits of QFE is businesses can claim tax deduction. For instance, when the company spend more money on planting and maintenance forests, their costs can be deduction on its taxable income. This has reduced the overall tax burden and makes forestry investment more affordable. Forestry activity usually requires the high cost at the early stage, while the return will take a long time. Therefore, QFE helps businesses to manage their costs and encourage their investment in the long-time forest development. Besides that, QFE also promotes sustainable forest management by supporting purpose maintenance and maintenance of forests. This helps the environment and natural resources. This helps protect the environment and natural resources. In conclusion, QFE provides financing to businesses while encouraging sustainable and responsible forest activity.
Hello, today I will explain forest allowance and permanent cessation in lock-in activities. What is forest allowance? Forest allowance is a tax incentive given to companies that are involved in extracting timber from the forest. It helps companies reduce their tax by covering part of the constructing costs needed for logging operation. There are two types of forest allowance. First is the 10% forest allowance. This allowance is given for expenditure incurred in constructing roads or buildings that are used specifically for extracting timber from forests. For example, if the company built a lock-in road costing, let's say, 200,000, the company can claim 10% forest allowance, which is 20,000 per year. Next is the 20% forest allowance. This allowance is given for expenditure incurred in constructing welfare building or living accommodation for workers involved in logging activities. For example, if a worker's hostel costs 150,000, the company can claim 20% forest allowance, which is 30,000 per year. One important thing to remember is that there is no initial allowance for forest allowance. Just for your information, the original initial allowance for normal capital allowance is 20%. But for forest allowance, no initial allowance is allowed. This means that companies can only claim annual allowance and they can continue to claim it every year. Now, let's move on to the permanent cessation. Permanent cessation happens when a company completely stops its lock-in activities. When this occurs, the remaining unclaimed expenditure can be claimed in full as forest allowance in the year of assessment when the company stopped operating. For example, if the remaining unclaimed expenditure is 80,000, and the company stopped lock-in activities in 2025, the full 80,000 can be claimed in the year of the assessment 2025. So, in conclusion, forest allowance provide tax relief to logging companies. The claim rates are 10% or 20%. There is no initial allowance, and when the company stop operations, the remaining balance can be claimed fully. Thank you.
For many years, the government helped you by giving you forest allowance to reduce your tax if you own a forest business. So, have you ever thought what happened next if you sell the forest or stop the business? In this video, I will show you what happened next through forest charge and election to spread back if you sell the forest and stop the business. In general, forest charge is basically a clawback of forest allowance previously claimed. When a person carries a business related to forest, receive forest allowance, and then dispose the forest or seize the business, the tax authority will impose forest charge which equal to the forest allowance claim. So even the forest is sold at loss or gain, the forest charge is remain the same because it doesn't depend on the selling price of the forest. And for timing rule, if the disposal happens during the business, it is taxed in that year. But if the disposal happens after the cessation, it is deemed to occur in the year the business ceases. For example, Mr. Adam owns a timber business. He claimed for RM120,000 of forest allowance. Then the business is seized in year assessment 2023, but he sold the forest in year assessment 2024. So, the disposal is treated as occurring in year assessment 2023 and RM120,000 is added back as forest charge. Next, let's move to an election to spread back. The law allows an election to spread back of forest charge to reduce the burden. Instead of taxing in full amount in 1 year of assessment, the taxpayer may spread the amount back to the previous year of assessment according to when the forest allowance were originally claimed. But the election must be made in writing within 3 months from the beginning of the year of assessment of disposal. In conclusion, forest charge ensures tax allowance are not permanently enjoyed, while the election to spread back provides flexibility and fairness to the taxpayer.
What is the disposal? Under tax law, a person is deemed to have disposed of a forest when the timber extraction business permanently ceases, or the concession or license to extract timber is transferred, surrendered, or assigned for valuable consideration. I will talk about meaning of disposal. When a person has incurred qualifying forest expenditure and later disposed of the forest, a forest charge will be imposed in the year of disposal. The amount of this forest charge is equal to the total forest allowance previously granted to that person for each year of assessment, including allowances given upon the permanent cessation of the timber extraction business. In calculating the forest charge, the actual sale consideration received or receivable is ignored, meaning it does not affect the amount of the charge. A person is considered to have disposed of a forest if, while holding a concession or license to extract timber, they transfer, assign, or surrender that concession or license in exchange for valuable consideration. When the timber extraction business permanently ceases, the taxpayer is allowed to claim a final allowance equal to the remaining balance of capital expenditure that has not yet been given as forest allowance. This deduction is allowed to in the year of cessation, and no further forest allowance can be claimed after the business has ceased.
If the forest is disposed of after the end of the basis period for the year of assessment in which the business permanently ceased, the disposal is deemed to have taken place during the basis period in which the business ceased. In this case, Hutanli ceased timber extraction on 30 November 2024, although the forest was sold on 31st January 2025. The disposal is deemed to occur in the basis period in which the business ceased, which is year of assessment 2024. Importantly, sale proceeds do not affect the computation of forest charge. When a forest is disposed, all of forest allowance previously claimed must be recovered through a mechanism known as forest charge. Normally, the forest charge would be imposed in full in the year of disposal. However, in this example, an election is made under paragraph 32, subsection 1 of Schedule 3, which allows the forest charge to be spread equally over past years of assessment instead of being charged all at once.
Moving on to the transferee for forest allowance. The transferee is the purchaser who takes over the forest upon acquiring the forest expenditure from the disposer. There is the disposer who is also called the transferor. Unlike the agricultural allowance, which the new owner can get allowance upon acquiring the qualifying expenditure, the transferee for forest allowance will not get any. It will only be given on new qualifying expenditures such as new planting of trees and new forest development after the acquisition occurs. As for separate business, if the person carries on two business activities in close proximity, which are extracting timbers and the processing of sawn timbers, they are considered as two separate businesses. Only the business of extracting timbers in the forest will get the forest allowance. In addition, the capital allowance given only for forest expenditure cannot be deductible against the sawn timber business. In conclusion, the forest allowance helps support businesses who are engaged in extracting and management of timbers. So, it reduces the substantial capital expenditure needed for activities like planting, harvesting, and also maintaining the trees. By minimizing the financial burden of the company, the allowance promotes responsible use of natural resources and sustainable forest management. It is also important to note that the forest allowance is strictly limited to the timber extraction business. Hence, government aims to strengthen the forest sector and ensuring long-term resource sustainability by providing the forest allowances to those who operate in the business.
Tamatlah sudah acuan tadi.